the Nasdaq Composite has smashed a new record high, kicking off the week on a remarkable note as investors prepare for a crucial round of inflation data releases that could reshape market expectations. But here's where it gets controversial. With markets already near all-time peaks, can this upward momentum really last? Let's explore the details and why many traders are both excited and cautious heading into this pivotal week. On Monday, the tech-focused Nasdaq surged by 0.5%, achieving a fresh intraday all-time high, while the broader S&P 500 edged up 0.2%. The Dow Jones Industrial Average also climbed, gaining 79 points, or 0.2%. This market uplift was led by robust gains in key tech stocks, notably chipmaker Broadcom, which advanced 2%, and AI powerhouse Nvidia, which rebounded over 1%, recovering some of the steep declines it faced in prior weeks. Additionally, major players like Meta Platforms, Amazon, and Microsoft all posted modest gains, underlining a broad-based upward trend within the technology sector. Ross Mayfield, an investment strategist at Baird Private Wealth Management, highlighted this tech surge, saying, "Momentum in AI spending and infrastructure investment continues strongly, and it's not just limited to the elite handful of tech giants, often called the Magnificent Seven. The average tech stock is performing very well right now, pointing to a widespread strength across tech industries rather than a narrow rally." Investors are now anxiously awaiting two key inflation reports scheduled for this week, which will offer deeper insight into the broader economic environment. The August Producer Price Index (PPI) is due Wednesday morning, followed by the Consumer Price Index (CPI) on Thursday. These figures are especially important following a disappointing jobs report on Friday, which showed weaker than expected hiring. This weaker employment data has stirred optimism that the Federal Reserve might be poised to lower interest rates at its upcoming policy meeting later this month. Market expectations, based on the CME FedWatch tool, now even suggest a possibility of a half-point interest rate cut, indicating a shift in sentiment toward more accommodative monetary policy. But Mayfield advises caution. We're currently in what you might call a catalyst vacuum, with markets at record highs and the seasonal trend typically weak in this period. Some downside drift could be expected unless there's an unforeseen event related to tariffs or trade policy that shakes things up. For now, markets are essentially in wait-and-see mode ahead of the CPI data. In another bullish take, David Lefkowitz from UBS Global Wealth Management believes there is still room for growth despite recent highs. Supported by a surprisingly strong Q2 earnings season, especially from AI-exposed companies, and a growing likelihood of a Fed interest rate cut in September, U.S. stocks have been hitting all-time highs consecutively, he said. Lefkowitz projects the S&P 500 could reach 6,800 by June 2026, implying around a 5% gain from recent levels. This forecast challenges the notion that markets are overextended and suggests a sustained bull run might still be underway. Meanwhile, in other notable market movements, Tesla's proposed compensation package for CEO Elon Musk is capturing attention. At nearly $975 billion, an eye-popping number, this pay plan is actually seen by some experts like Morgan Stanley's Adam Jonas as a smart move that aligns Musk's long-term interests with those of Tesla shareholders. Jonas explains that despite its staggering size, the package is reasonable considering the enormous market potential Tesla holds, particularly in emerging areas such as AI-driven humanoid robots like the Optimus project, which Musk says could someday account for 80% of Tesla's value. The package ties compensation to operational, profitability, and market cap milestones, underscoring a long-term commitment without a clear succession plan in sight. However, Jonas downgraded Tesla from a top pick but maintained an overweight rating and a $410 price target, reflecting both confidence and caution. On the political and regulatory front, Stephen Miran, President Donald Trump's nominee for the Federal Reserve Board of Governors, is set for a critical Senate committee vote on Wednesday. Miran, currently head of the Council of Economic Advisors, has voiced criticism of the Fed's recent policies and is widely expected to support a rate cut if confirmed. His impending vote could have significant implications for Fed policy given the balance of opinions on the board. Technical analysis also offers a mixed picture. J.C. O'Hara, chief market technician at Roth Capital Partners, notes that despite seasonal headwinds common in September and October, key support levels for equities remain intact. Although there's been a subtle shift toward more defensive stocks, the market hasn't broken down meaningfully, he explained, suggesting that while upside might be limited in the short term, no major downturn is imminent. Several individual stocks saw notable movements Monday. Fortrea, a pharmaceutical company, fell over 9%, possibly from profit-taking after a strong recent run. Cinemark Holdings climbed 4% following the blockbuster opening of The Conjuring: Last Rites, marking its second biggest domestic horror film debut. Etsy increased roughly 6% on news of a key executive appointment, while EchoStar soared 14% after agreeing to sell spectrum licenses to SpaceX for about $17 billion, a deal including both cash and stock, and enabling a strategic partnership for SpaceX's Starlink direct-to-cell service. In contrast, other telecom stocks like T-Mobile, AT&T, and Verizon dropped in response. Canada Goose shares rallied 14% after an analyst upgraded the stock to buy, praising the company's successful shift from traditional winter wear to more year-round lifestyle outerwear with fresh marketing that resonates culturally. The stock has already surged 52% this year, fueled partially by takeover speculation. Robinhood and Elon also enjoyed their best trading days since early April, climbing 15% and 12% respectively, following their upcoming addition to the S&P 500 index, a move often associated with increased visibility and investor demand. In contrast, Alphabet was downgraded by Phillip Capital, despite a recent strong rally after a court ruling favored the company in its antitrust case. While the decision prevented a breakup of Alphabet's Chrome and Android assets, the requirement to share some search data with competitors introduces caution. Analysts expect Alphabet to continue benefiting from AI enhancements, but remain watchful. Morgan Stanley strategist Michael Wilson offered a nuanced view, suggesting that short-term market volatility, particularly through September and October, could actually set the stage for a strong finish to 2025 and a solid start to 2026. He noted, the market's tolerance for a weak labor market hinges on the Fed's ability to respond effectively to inflation and economic growth risks. That balance will be critical in determining the upcoming trend. On trade policy, Treasury Secretary Scott Bessent expressed confidence that President Trump's tariff initiatives would hold up in the Supreme Court, but warned that if the court rules against the tariffs, the Treasury might have to issue massive refunds, potentially impacting government revenues significantly. Finally, international markets reacted to political news, with Japanese